Okay, good morning. This is Simon with Trade and Perform Coaching. It is 1/28/2025. The first month's down, 11 to go, or almost, right? Hold on 1 sec. If you'll take a moment to read that, I'll leave it up for a couple seconds. Basically, you can lose your backside day trading futures. If you don't know that, you should know that. So there you go. Okay, so the first thing I wanted to cover is yesterday, right? So yesterday actually turned out to be a halfway decent day on some algos, but the important thing is, look, in making money, right, we trade with leverage, a lot of leverage, right? You want as close to a normal market as possible, and if you're unsure about how the market's trading, just don't trade, right? Like, I only had one person in the room that had a difficult day yesterday, and they simply didn't show up until after the open. They didn't read the postings I put in Slack, and they turned on their algos, and they got smushed in the first hour and a half, right? And they were very upset, and I said, go look. I go, but you don't even need me to look. Like, look at today. The NASDAQ's up 50 points. That's normal. If you see down 900, not normal, don't trade, right? We way overestimate our ability to deal with adverse conditions, and we way underestimate our ability to lose our cool, right? Both of those. So, secondly, remember this number, okay? This is a big, big, big deal. Okay, I'm going to do this in a second. Hold on 1 sec. This number right here. Okay. You should all have this up. This is 1 year, not 1 week, 1 month, 1 day, right? This is 1 year of numbers, right? 3 contracts, 49,000. 4 contracts, 58,000, right? Which makes sense. You're adding one more piece of risk, and actually this one, you're not even getting the maximum out of the risk, right? And what's deceptive about this number is this, right? Let's say I start off with $10,000 and I trade micros, right? Say I start off with $10,000 and I trade micros, right? So, dang it, sorry. If I trade with micros, I got a $10,000 account, I'm going to trade 15 micros, right? Start off with that account, and it's going to grind slowly. So eventually I get 10,000 to 15,000. I go, hey, at 15,000, maybe I can trade 3 because I know my biggest drawdown from the math is about $8,000, right? So if I go from 15 to 18, I still have 7, and that's acceptable risk for me, right? So this model's I could say the exact same thing, right? If I start off with $100,000, right, and I work it up to 110, right? And then I know I can withdraw. I'll go from, maybe I start here with 3 contracts, right? Because I know on 3 contracts, and I take it back. Yeah, that's right, 3 contracts. I trade 3 contracts, and I have the same exact problem. I can go from 105,000 back to 97,000, right? But the idea is over time, because we know those drawdowns are going to come, that either this little account will eventually make it, right? If you stay consistent with the execution, and we repeat the big if, past performance not indicative of future results, but if the principles of the model hold true, which I believe they will, right? And you take this $10,000 account, right? Even if it draws down to 7,000, right? It'll eventually make its way up to 20,000. And at 20,000, right? At 20,000, you go, hey, maybe I can go 4, because at 4, I know my worst case scenario is my intra-month drawdown can be about $9,000. So worst case scenario is I come back to 10. But I also know that these are drawdowns, and that because I see the curve month over month, right? Because I see the curve month over month, and I know at the end of the month I tend to end like this. There's only 1 month it didn't, which was August, and I've repeated multiple times how we can handle the August situation, right? So whether you're doing it on this model or you're doing it on this model, all you have to think through is, how do I handle myself in this phase? because everyone handles this phase great, right? This phase is easy to handle, right? Woo! That was nice, right? This phase, suckarama, right? Because you're going to have to wait till this leg kicks back in. And that's where all the anxiety. What if it doesn't kick back in? What if this is the time it goes to zero? That's why it's called risk capital, right? Risk capital. Now, we'll continue to refine the model, find what works, what doesn't work, take out the pieces that underperform, add the pieces that do perform well, right? So what kills this model, right? If this is your normal range right here, when you land up here and up and down here, I'm talking about the market. If this is the normal range of the market, give or take, some days smaller, some days bigger, but this encompasses 90% of the days, right? If you insist on trading on all these outlier days, because what people think is, oh, it's a big day, I'm going to make a lot of money, right? The problem is you have almost no practice on these outlier days. You don't know, right? See, when I go, oh, does this algo work or not? I don't know that the algo works, because even if I go back and look, I just have no mental seat time with a market that's way out there. So the obvious choice, right, is like I live in Dallas, right? When it ices, we don't have the best road clearing equipment. We don't have, not every street gets sanded, and it's usually ice, not snow, right? So I live in Dallas. There's ice. Guess what I don't do? I don't go out driving, right? Because I know rubber skids on ice. You can't stop the damn thing. And I drive 5,000-pound cars. So I choose not to exercise my freedom to get in my car, turn it on, and go driving on those days. I make sure my house has food. I stay at home. Why is the other reason? I don't have any reason to adapt, because I know that within 3 days, it'll all be gone. We're going to get over 32 degrees and it's all going to melt, right? So I can wait it out. This is ice to all of us. This is ice. Just wait it out. Let it go away. Now, yesterday, once we got through the day, I kind of looked and said, oh, it's actually trading okay, right? But I already made my decision, and I don't want to train my brain into indecision. I already have enough of that being ADD and flipping around. So you don't need the outlier days, and the model clearly says you just don't. As a matter of fact, what the model says is don't trade the outlier days and don't trade Fridays, is what it says. Now, can I go in there and pick out Fridays on that model that worked really well? I can. But at the end of the year, Fridays cost me $10,000 to show up. So think about that. You're showing up every Friday on that model to lose $10,000, right? The other point I have about this model is this model is actually down the first 3 months of the year. It ends up down minus $10,000 at the middle of March, I believe. We're minus 10,000, okay? And a little bit more on the 4 contracts, okay? I want you to think about that, because someone asked me, and I think I said this yesterday afternoon, but someone asked me, well, how do you know it didn't outperform last year? But I can actually give a pretty square answer just based on the first month. From December 15th to December 17th, the ALGO almost did as much in that 30 days as this did in the entire year, right? And it was nothing special. If you look at that time frame, I couldn't have pointed to anything that said this is exceptional. Just performed really well, right? Just performed really well. So now you have 3 things in your favor. This is important, right? You have an algo that appears, at least for 1 year, to run through all the rough spots. That number includes August. You take out August, you bump those numbers by about $12,000, right? Except for August, and the highest volatility appears to really hold its own. And then at the end of the year, it has places where it really has the opportunity to accelerate, okay? So now, where I see people making mistakes, I'm going to say this really clearly, where I see people making mistakes is overpressuring the day and counting today as the most important day, as if, for those who are under financial pressure, today will make a difference. And it literally won't. You cannot win the whole game today. You can't. It's a year-long race, okay? So get in line, whether you're manually trading it, using the Trader Assist, doesn't matter. Don't trade days where you run the risk that if you lose your, especially if you're manually trading, if you lose your mental focus and discipline, it's going to cost you way more than it does on other days. Okay? That's all I have to say about that. Any questions on that piece? Make sense? Did I explain it clearly? Need feedback. This is group participation. Well said. Okay, perfect. So next piece. I'm going to spend probably this entire week reorganizing the old algos. Why is that? Because when I came back to this one, right, we've taken and added and we moved, and I bear 100% of the responsibility on this. But this little algo right here, okay, this little algo right here, the long side, the short side lost $2,500 yesterday. The long side made 75. The short side, well, I'm misspeaking. The short side lost $2,500. The long side made $7,500. That's a 15-tick chart, right? I don't think anyone's running that. That's the vol and triple triangle trades, right? And I bear, this is not Bill, Sean's, Ed's, or anyone else's fault. I simply dropped it, right? Because that's just how my brain works. So I'm going back and reorganizing. But what works particularly well here, and I don't have it in the current layout, but I will fix it today, okay? Okay, particularly at the 5th channel, but everywhere in general, okay? See, so most of you still have this layout. If not, I'll get it for you, but you get the stair steps, and then you get the star, and that produces, you still have to figure out whether we're going up or down, right? But that produces very beautiful rotations. Okay, so this is the 24 tick, right? So if you look, stair steps, star, push. Now, I don't have the equity management down quite, but I already know. So let's pretend this is a star, right? It's not because of where the POC lands and all that good stuff, but let's say this is a star on this bar. I already know, like, if I take this trade 3 times, one time stretches like this, so that's like 50, 60 points. And one time, and the other 2 times cost me, let's say one time I get 1 bar stretch, so I get my risk off and then stop for 0 or however I work it out. But I can work this part out. I pretty much know once I get this trade. So the question becomes, if I enter on this star, see how it comes down, pretend this is the stair steps, right? So if I enter on this star, I pretty much know the next bar needs to be up. And I pretty much know once it needs to be up that it goes in a straight line like that. Like when that thing rips, it does just like this, right? So I need to just recalculate on the 24 tick the way this works. So if I get this star bar up, so the stop should go right here, star, and then up, 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 and then this bar down should be the exit, right? So if this is star, or I need to move the trailing stop, but there's a way to capture this, right? So there's a way to capture it so you can both either get the immediate push, right, which is fine because this is, I don't know how much this is, but if I enter here, this is 06 to 39, so 30 points, right? So if my stop here starts at 15 points, I scale 15, 30, stop to break even and push for the 50, 60, right? So I don't get it here, but over here I would, right? Enter, scale, I don't get the second scale till over here, stop down to break even, and I get paid here, right? So I know, again, stair step, so the relationship there is stair step star, right? It's pretty straightforward. Stair step, wait for the star, and it's the green star on this. I know there's multiple stars. It's that green star, not the red one, the green star. And so I'll get this added back in to the Austin layout, right? Because it's valuable. Now there'll be some times where you get this, I get the scale, and I just get stopped out and I miss this giant thing. And there's ways to work around that, right? If you change your RR, you can take a deeper stop initially, but the point is that trade works. And not only does it work there, but it kicks ass over here. Here, I'll show you. Stair step, star, and this is such a tiny stop. That's a sub 10-point stop for a face ripper there, right? And clearly I don't have that one in that chart book, right? And then what I had to figure out, right? So it's not just that it worked yesterday. So I know the longs worked great yesterday, right? So now I have to go back. I'm getting to the important part here in just a second. To the 15th. So I call the 15th the Widowmaker Day, because either the algo does great on the 15th or it gets its ass kicked on the 15th. There's really not an in-between. So I'm going through with Bill and Sean's help and cataloging. I'm going through every algo we've had for the last 3 months, and with the goal of improving the algo that we have right now. So if I go back to the 15th, I don't know why the 15th is so bipolar on each algo, but this thing just either kills you or makes you a lot of money, one of the two, right? So if you look, this is geared for long, right? So if I go, here's long, 15 ticks, so that's paid, right? Stopped. Again, I got to manage the stop, and stopped, right? So then that doesn't bother me at all. That's perfectly normal. Stair step. This bar should have a star on it. It doesn't. We'll get it fixed. Okay. So I'm just looking alongside. Stair step. This bar should be starred. Stair step, starred, stopped, paid. You see the RR potential there. Stair step, star. Stair step, star. And what I want to do with this, right, is I want to get my risk off here, let the balance come back on the trailer, and then let this thing, so see this is stop and then re-enter, rip, right? And then inverse here, this is this, star, down, stair step, star, down, right? So I just have to get it reorganized. Again, star, rip, right? And these are huge RR because the stop on this is basically on this bar is either 7 or 9 points. Let me see. 49. Let's call it 49 to 43, 49 and a quarter to 43. That's 6. Let's call it 8 points, right? So that by the time if I get a 49 quarter entry, I get a 76 exit, right? So that's 26 points for 8 points, which is a 3-to-1 RR, right? And that's what I need to get the trade to face rip, and I will get that. I will get that fixed up. I don't have it fixed up right now, but I will get it fixed up, right? And then I got to go find where it fails and where it doesn't fail, right? That's my only concern on this particular day, right? Is how do I get it to get fixed? So like this, right, should be the star right here, okay? So I'm just letting you know I'll be spending my day fixing this. Now I want to show you the important part for the manual trade. So I just got to go back and reorganize it. I'll get it done. My nature is to push very hard. I don't slow down very much, but I need to go back and cherry pick out what works exceptionally well and formulate it not into the current algo that we have that's working so well, but formulate it into a new algo, right, that can run side by side and supplement it. And then I got to do all the numbers and run all that, but I'll get it done, right? So next. Let me erase the lines. How am I doing on time? Good, good, good. I'm going to need a pause in a second to turn on my algo. Hold on a second. Give me just 1 second. I apologize, guys. Yeah, let me show you this so you can look at it, okay? Here, perfect example right here, but I'll show you a couple of them. See the plus signs? When we're coming down, we're looking for a plus sign down, okay? So we're coming down, we're coming down, we're coming down. This is easy to look. Everyone has the plus signs on their chart, right? See the plus sign? We're working on algoing it, but we don't have it done yet, right? See that? It's best if it's at an extreme. I want to say that again. It's best if it's at an extreme. Take the plus sign, put a candle around it, and you see the net result, right? It works the same way short, but where you want it again is when it pops up at an extreme, right? So see up here, this is the last one. This is the bar I want to work off of. Close underneath, backside test, first bar down, down it goes. You can see the zone. They almost tag it twice, right? You can see they cut through that zone. Again, now it's this guy right here. See this? It's that guy. They don't come back. Well, they touched the zone. They just missed it. It's the zone. That zone is 29 to 11, so it's a 20-point zone, right? Responds back up. If you look, this is where the, so if you look at this, right, you go, oh, there's plus signs here, but it's not an extreme. The one I'm interested in is this guy right here, right? So see, it comes up. Right, comes up, tags it, rejects. They attempt to reject. They eventually break above. It's the last hour, so they're going to chop it around, right? If you look earlier in the day, it's this guy. Up to the high, last plus sign, underneath, backside test, roll down, over here, last plus sign, right? It's above, backside test. This is a wide range. You're going to have to figure out how to manage what you want to do there, but you can see that range held. If you traded no leverage, you'd go, oh, well, that's a no-brainer, right? So it's just up to you to figure out how you want to manage that trade, but what becomes very apparent, right? What becomes very apparent is, first of all, see when we're in this free fall, right? You go, oh, I got to get above this. You're looking, you're like, oh, I don't want to get back below this. See that? Get back below, closes underneath, backside test, falls. Over here, to go higher, I've got to get above this guy, right? Above, backside test, push, backside test again, take off. That's the pattern I wanted to show you, right? It's an important pattern, right? I believe it'll make you, a lot of money if you manage it correctly. Someone like Dan, you should be able to use those to great effect. Not only that, but they give you targets, right? If you look, you're looking for your last plus sign up. It's this dude right over here, these two guys, right? That's my target up. See that? That's how that works. If I'm getting short out of here, right, I'm going back. Where's my last plus sign down? Still this dude. So if I short over here and I'm trying to get the extension, that's how I get it. And that's telling you where the volume is sitting, where the liquidity is sitting. Dan, did that make sense to you? And when it's slow, you got to go to the 15 tick. It does not work in a low volume range. It does not work in a low volume range or a tight range because they just stack up on top of each other. And then you have to go to the 15 and you got to grab the 15. And I would suggest on the 15, you push that way out. You're looking for the ones all the way on the edge, right? The conservative way is to obviously go, okay, I'm underneath, coming back up, and I'm going to take the first bar down with a 1 bar stop, right? That's the logical way to do it. But the other way to do it is just, hey, there's the top of the bar, wherever we are. Here's the top of the bar. I'm just going to short into it and pray it works. That's the please help me out mode of trading, but it works, right? Today we have 9 a.m. U.S. consumer confidence, okay? I am telling you, the only one thing matters in this thing, whether you get 1 trade or you get 100 trades, doesn't frickin' matter, okay? Doesn't matter. As long as, right, as long as you know what you are doing in your trading. Okay, I'm going to say that again. As long as you know what you are doing in your trading, what the risks are. If you make today the day that you must get paid, you are screwed anyways. I'm just telling you right now. Today should be I'm collecting money and depositing it for the end of the year. I'm working towards my 50, 100, million, whatever it is, however many accounts you have. And I am a compounder of good trades, right? If you are, I have to make $100,000 today, you're going to have to be very special to do it consistently, right? Very, very special to do it consistently. I'm going to be working on getting these stars after the stair steps back in and working on the mathematical model to make sure that it works. That's all I got. Anyone have any questions? Did anyone feel terrible for not trading yesterday? I bet not a soul did. You just look at it and go, well, it could have been traded, but I'm glad I have my money. And now here it is today, normal day, NQ up 34, ES up 9. Oh, it's not the disaster that I thought it was, right? Anyone who's been doing this for a long time and keeps going boom bust knows how horrible a cycle it is. It just mentally just beats the shit out of you. So you gotta end the boom bust no matter how you do. Whatever does it for you, stop the frickin' boom bust. That's great, Dan. I figured you did, but you're an exceptional day trader, brother. When you've got the range, you've got it. Most people aren't on that level. Yes, I'm taking, and there's an update to it, Tasia, and that update is where it breaks it out separately, and that is called crap. I have created so many chart books in the last couple of days. Hold on. NQ 122 2025 TMP. And it breaks the longs and shorts out separately there and gives you the 60 tick. You should have it. I sent it to you. And if you'll give me a second, I need to set up my charts really quick because one of these has a freaking stop. There we go. Back to Chester on it. So I can get this thing out of sim. Yes, I do. And I don't have this thing on. Hold on a second here. Timber. Sorry, I need to adjust the screen. Give me. And I'm going to have to change the background colors of these. Sorry, I know it's hard to see. I'll work on it. Apologies. Let's see if I can change this. So here we know. Coming down to that support zone. You see this right here? And you get it close above it, point of control minimum or orthodox, backside test into it, run up. That's what you're looking for. That's a little bit better. I still don't like it, but at least it's a little bit better. This is the bar we're queuing on for manual trades. Nasdaq's only down 57 points. Remember, you have the econ coming up at the top of the hour. Two plus signs down. There's your support. I'm pretty sure it's long out of there. That's probably the low of the day, is my guess. They pushed pretty hard there. I don't know it for a fact. Any backside testing of these guys should find responsive buyers. Back testing to that. So now your zone is down to 71. It's a lot easier management on that. And you're looking for your first bar up out of here to push up. All right. Not yet. And you're right back there. So if you want to try that 70, see how I got to 78? You can just put a stop at 70 and see if it'll hold, is the other way to do it. Another plus sign down. Or you wait in the more conservative ways to wait for the reversal bar, 1 bar stop, and you give it a shot. It's first half hour is normal, but yeah. No reversal bar. You just wait it out. Boom. And that would normally be a star on those multiples in a row. That cross through would normally be your star. Can't have it close against it. Go. You can see where the resistance is. Obviously, we get back below 34. Goes. Beautiful again, backside test, green bar up. It's obviously trapped between these 2 points. And really we can adjust these targets a little bit now. It's, what you're actually looking at is this plus sign. Right over here is your resistance. That one right there. It's got to get over this 34 to go. And then the 100 and the 200 to the upside. Bam. It's got to get above this. Closed above. That should now become support on this backside test. Making sense the way I'm explaining it, you guys? And then this is your target right over here. That dude right there is your extended upside target to get specific. Into the 100 and 200 and 400 period moving averages on the 24. Obviously that's a potential resistance area as well. Nice, Dan. Good job. Yeah, I agree with that trade. So see how we've closed below? Now on a micro level, this becomes your resistance. So we're minutes away from econ, right? But a push, close below, push back up, bar down, or push down, come up. So now this next bar down out of this should hypothetically push down, right? So you cut this because it's going to continuously update. So you just go with the latest is the greatest, right? So you've got this down here. You've got this down here. See how I came back, backside tested it, touched it left. Now I came up, bar down, it's a 1 bar stop. And where are you looking for extension back to? 185. So where are you looking for an extension back to, right? So you just don't want it to close back above this plus sign here. So that 58 is literally your stop, right? So the problem here is you're running into numbers and you're in the hole. And the last trick to that whole deal is to orient yourself where you are on the chart, right? So you can see we're in the fair pricing. So this is getting relatively, we're in unfair pricing. We tested underneath, right? Now we're coming back up and running back through. This chart is based on the 24 hours. I'm pretty positive. I don't want to misspeak. And so then you just have to think, do I want to short here or not? Session times. This is RTH and overnight. Sorry, I'll put up another 24 hours there. So see how this was important? Came up, backside test. There's no need to push it beyond this bar, right? Close above, see ya, right? And you know it's going to be noisy going into the econ anyways. Next target up. That's 100 points. One minute till we come. Three pluses in a row. Nice trade, guys. If you only got that stretch out of there, that's, like I said, I thought that was probably the low of the day. All the way, 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 all the way back. See ya. That was a beautiful swing, man. like I said, I thought that was low of the day. Guys on YouTube, thanks for joining us. We'll be back mañana.